Hey guys, welcome to this week's edition of the Friday Wrap. I apologise I didn't get one out last week. I was travelling around seeing clients in Sydney and Canberra and I just didn't get a chance to record one, so I do apologise. This week we are going to talk about asset classes. Let's have a look. It's quite interesting when you get into it. First of all, the general advice warning, please don't run away and do something based on something you hear me say. If you need advice, give us a call. We'll talk about you and your particular circumstances and we will advise you accordingly. Okay, talking about advising you accordingly. What's the best use of your money? What are your objectives? Do you have short-term objectives? Do you have long-term objectives? If we're going to advise you, we want to make sure that we advise you appropriately. I'm 42. If I'm investing money for the long term, say until I retire at age 60, for example, I want to be invested in growth-oriented assets. If I'm 42 and I receive an inheritance and I want to allocate some money towards building a house or buying a new property in the next couple of years, I have short-term objectives, and how we invest that money or how we advise on the investment has a lot to do with your time horizon. Okay, so that's one thing. What are the asset classes that we advise upon? We use managed funds to invest through the various asset classes, which are Australian shares. The fund we use uses the ASX 300, so the top 300 shares in Australia. International shares, through the fund that we use, 65% United States, 20% European, and 15% Asian stocks. Commercial property, so Australian commercial property, shopping centres, big office towers, they are the commercial properties that are invested. Bonds and cash, so down here is more of your short-term investments. Up here is more of your long-term investments. Okay, so down here, term deposits, offsets accounts, money in the bank. Okay, that's what we're talking about. Annual performance of each over the last 12 years. International shares for the last 12 years average 12.9%, property 12%, Australian shares 10%, bonds 5.6%, that's international, Australian 5.2%, and cash 2.6%. So that's great. What does it mean to me? Well, let's have a look at the next slide. Actually, let's not. The next slide, we talk about, as I just said before, growth assets and defensive assets, okay? So if we're invested for the long term, we want to be invested in these assets because generally they've got a higher rate of return, but the volatility, as you can see here, minus 6%, minus 21%, minus 7%, is there more so than down here. Minus 1, minus 0.8. So if we've got short-term objectives, we are all about preservation of capital. I don't want to advise you to invest your $200,000 that you've received from an inheritance that you're going to use to buy a property in 12 months' time to invest in an asset which might do that in that 12 months. No way. Preservation of capital is the most important thing. So if it goes down by that or that, we can handle that. Okay, we're talking about what's the best use of your money, long-term objectives, short-term objectives, growth assets, defensive assets. Next slide, okay? Wow, what is this actually telling me? Let me go over here first. Australian shares, average 10% over the last 12 years. Worst year was minus 7, best year was positive 30%. International shares, average 12.9%. Worst year was minus 0.5, best year was positive 33. So on and so forth. But what you can see here, across the top here, we've got each of these asset classes and their years. On this next one, we've got their ranking from best to worst. So all of a sudden, it's all been muddled up. Now, what you'll see though is, say for example, Australian property, international Australian shares. Generally, these guys, let's go international shares, top, bottom, top, second, third. Australian shares, second, first, third, second, down the bottom, second, third. So we can generally see over time that these top guys are up the top, but they've got these worst case scenarios in the bottom where they've fallen due to the volatility of that particular asset class. Okay. Now, a couple of things that we want to be aware of, or that we want you to be aware of, is don't chase last year's winner. Last year, the Australian share market, I went ahead to then. Last year, the Australian share market was up 12.2%. This year, it's down 7%. So it's no good to grab your money in 2012 and go, well, hang on a minute, Australian shares did really well last year. I'll just put all my money there, when next year it's down 7%. Okay. And by the way, sometimes it works the opposite. This year, in 2016, international shares was the worst performer, 0.4%. 2017, we are at the top. So don't go Well, I don't want to put my money down here in 2016 because that one's no good, when next year it's the best performer. Now, a couple of other things. Sometimes the best performer has a bit of a run. We've gone first. We've gone down here to last. We've only gone first, second, third. So international shares had a really, really great run from 2013 all the way through to 2021 when it was in the top three all but one of those years. But what we are about is not trying to focus on the winner, not trying to time the market, being appropriately invested for our objectives, okay? So if we're growth oriented, we're going to have a mixture of Australian international shares and property. If we're balanced, we'll bring in a mixture of, say, 25% of these guys just to soften the blow for these downward years, okay? So we're not trying to time the market. We're not trying to pick one. I wouldn't be here serving you if I was any good at that, because I'd be living on an island looking after my own money. I can't do that. I'm not smart enough. And quite frankly, I don't know anybody that is. So all we are about is investing in accordance with your risk profile, which is all about your objective. Are they short term? Are they long term? And picking a combination of these asset classes that suit you and your investment objectives. Now that is me for this week. What's my question, you may ask? Last week I forgot to think about a question, and I just said, who's your favorite advisor? Thank you to everybody that picked me. Thank you to the one client that picked Emmerich. He still works in my office, so I'm okay with that. This week, we're talking about asset classes. I mentioned that the ASX 300 is the asset class for the Australian share portion of the investments that we use. So I want to know from you, what are 3 companies that you regularly use, whether you shop there, whether you bank there, whatever it is, that are publicly listed companies on the Australian stock market? So 3 companies that you regularly use that are publicly listed on the Australian share market. That's me, guys. Happy Friday. Have a great long weekend, and I'll see you back next week.